Well, let's jump into it. As you said, we're going to start off again with that jobs report. I mean, as I said, it spooked markets. I see the S&P, the NASDAQ fell pretty heavily on the trading day Friday. NASDAQ was down, I think, over 2%. S&P was down 1.6, it appears. So it definitely hurt things. And reason being, I mean, I'm going to start with this. It missed expectations, to say the least. July non-farm payrolls grew by 73,000. The estimate was 100,000. You might be saying, well, that doesn't sound that bad, right? Well, when you dig into the numbers, I mean, there are some big concerns. The big concerns stem from the prior 2 months saw major negative revisions, as June was revised from 147,000 to just 14,000. And then May, well, that was revised from 125,000 to just 19,000. This amounted to a total negative revision of 258,000 jobs when looking at the last 2 months combined.
Yeah, I mean, that's a big number. When you're expecting 150 and you get 15, close to it, that's a big decline. And I mean, the markets have been going up pretty consistently. So, looking at it a little bit further back, things are still good on the year, good even on the month. Month ended fine, but there might be some cracks out there.
There might be some cracks. I mean, the way I kind of look at this as well is it's let's say you had an expectation for 300,000, right? I'm just going to throw that number out there. And you came in at, what did I say, it was 258? You came in at 50,000. I mean, that'd be terrible. You'd be like, oh my gosh. And that's kind of what happened, because the revisions were so large that, I mean, it was shocking. I mean, that is a huge change. And the other thing that concerned me was the job growth, I'm going to say, wasn't even robust. And the reason I say that is it was so reliant on healthcare and social assistance. That category added 73,300 jobs in the month. Again, the headline total, 73,000. So basically all the jobs came from just that one category.
Right.
We're not used to, again, seeing a labor market that's had cracks like this.
Right, yeah. Retail trading added 15,700 jobs. Leisure and hospitality added 5,000. Construction with 2,000. There's some categories that saw declines. Government was down 10,000 jobs. Manufacturing declined by 11,000. Professional and business services declined by 14,000. So, a lot of out there, losing jobs as well.
Yeah, and that's where things get concerning is, I mean, coming in at, again, 73,000, having slow growth for 2 months. I mean, even if you say, let's have growth of 50,000 jobs a month, I mean, that's not going to be a bad economy. You still have a growing labor market. That's good. The question is, if we flip to negative payroll data, that's where you could be tilting towards some scary news here.
Yeah, and that can go bad very quickly. So, having negative numbers, or kind of as you said previously, which jobs are receiving the growth, because not all jobs are the same. We want good, high-quality jobs to be growing, and, with retail trading be a big number there. It's Right, yeah. So seeing a decline on that one, that's a little frightening there.
Yeah, and I got to say, I mean, all this sounds negative, but I still wouldn't panic over this report. The main reason is the unemployment rate remains historically low at 4.2%, and layoffs have not materially increased. And I would even make the claim that the unemployment rate is healthier than it appears. Now, why do I say that? If you look at the average weeks unemployed, that now stands at 24.1. And those that have been unemployed for more than 27 weeks, that jumped to 1.82 million people, which is about 1/4 of all the unemployed. I mean, if you've been unemployed for 27 weeks during this labor market, I hate to say it, but I mean, how hard are you really looking? Can you truly be counted as unemployed if that is the data?
Right, yeah. I mean, that's always especially right now with the time of the year that we're going on, there's a lot of people moving around. And I think that there's people out there that maybe because of the way the market's gone, they have a little bit of cash in their pocket, and so they're holding out on, what they think they're worth. And so, that's lasting a little bit longer. When really, if you need a job, you might need to get a temporary job. Doesn't have to be your long-term career, but, I think there's a little holding out there.
And man, I'll kind of get to this in a little bit more detail in just a second here. But the other thing that I wonder with those, 1.8 million people that have been unemployed for 27 weeks, how many of those people are, somebody, let's say 62, maybe they got laid off, maybe they were looking for a different job, and they're like, I could retire.
I know that there's people in there because we have clients that do that.
Yeah.
That something happened, they get laid off, or they just, don't want to do that anymore, whatever it is. And then they're looking around and they're interviewing here and there, but it's not really what they want to do. So it's not something that they want to pursue. So they're in that age where they could be working, they're in the workforce, but also, they have the assets of like, maybe I will just retire.
Yeah. So, that's where I look at, again, we got some, I'm going to say questionable data here from the labor market and the payroll data. But again, you have to understand the unemployment rate is still healthy. We still have a healthy labor market at this point in time. Things can always change. But as of today, I would say the labor market still looks good. And the other thing too, when I look at, again, that low unemployment rate, I talked about low layoffs, and people might be, oh no, I hear all the time people are getting laid off. Well, let's look at the data. June layoffs actually totaled 1.6 million. And really since about 2021, they have maintained that level with the average monthly total since January 2021, standing around 1.57 million. If we look pre-COVID, from December 2000, which is when the data first started, to February 2020, layoffs averaged 1.91 million per month. So we've really seen a low amount of layoffs compared to historical standards. We have a low unemployment rate. It really seems like a lot of companies at this point are saying, well, we're not going to fire anyone, but maybe we're not going to look as aggressively for people.
And I think, those numbers that you pointed out are really important. Again, layoffs averaged 1.91 million from 2000 to 2020, that 20-year gap, 2 decades, 1.91 million. And in June, we saw 1.6 million. So yeah, you see these layoffs, but historically, that's actually, a relatively low number.
Yeah, and I think that's where, again, you will always hear companies with layoffs. It's going to be part of the labor market. It's just going to happen. But again, you have to look at the whole economy, and you have to understand too, a small business, it starts with a large part of the economy, and frankly, it doesn't capture the headlines like Microsoft announcing a layoff, like Meta announcing a layoff. That's going to capture the headlines. But, Joe Smith Plumbing Company that has 200 employees announces a layoff of 5 people. That's not newsworthy. So you have to understand that small business component really drives a lot of the employment situation, but it appears they're not doing many layoffs at this point in time. And it seems like the economy as a whole, the labor market as a whole, layoffs still look okay.
Yeah, and I think, large companies are the ones that do more of layoffs anyway, because they might be shifting their business around. They're going into a different market. They have a different service or product that they're going, and they're getting away from something that's less profitable. So they have, a whole catalog of different products and services, and they want to go after what's going to make the most money. And that might mean, well, we don't need these types of workers for this product line anymore. We're going to now lay those people off and then hire more to do this type of, skilled labor, whatever it is.
Yeah. And one thing too that I look at with this jobs report is, it's just one data point. And obviously we had 2 negative revisions, so you could argue maybe it's 3 data points of questionable data. But we got 1 bad data point, 1 day of bad news. I am curious if we will get, a little bit more positive news on the employment market going forward. And the reason I say that is we do have a little bit more clarity on the trade deals and tariffs now. We've seen all the different trade deal announcements. Obviously, China's still a wild card. Canada, Mexico, those 2 countries, major trading partners, still a wild card there. But at least companies now having a little bit more clarity. I wonder, as I said, a lot of businesses were saying, maybe we're not going to hire over that 3-month period. That is really when tariffs were, April, May, June. That's when tariffs really kind of rocking the market, and companies like, I don't know. Could we have that clarity? And then maybe this is just that 1 bad month of data points, and now we kind of bottom out and we start to see, I don't think a robust labor market. We're going to see huge payroll gains, but again, stabilized gains, which is really, I think, going to be healthy for the economy, for the labor market as a whole.
Yeah, so it's going to be really important to see what the next reports come out so we can see if there's any trends going on, because 1 data point by itself doesn't always tell you a lot. So what is the labor market? What is the, what are those numbers going to look like in the next couple of months or into the next quarter?
And the trade noise, I think, created so much noise in the economy. We'll get to more of that during the GDP. But again, I wonder how much it impacted the labor market. Could this just be a blip where it's like there's so much confusion, there's so much messiness, where we get back into, October, November, December, and things are, again, more stable because we don't have all that trade noise. Companies now have their plans formalized. They know what's going on. They know how to attack these tariffs and how to kind of manage through them. Right now, for for the last 3 months, I could have been saying, I'm not really sure. We're going to wait and see how things shake out. That could really choke things off and slow things down. So just one thing to consider, that maybe things, while they were somewhat troubling, were maybe troubling for a reason.
And yeah, and there's another good point in there that wage inflation came in above expectations at 3.9%. So, we talk about inflation and everything else, but wage inflation going up, I mean, that's something that is very good for the economy. The more money that people have in their pockets are out there, spending, which is a great thing.
Yeah, I think that is the best part. the labor data that we saw was, again, good wage inflation. And again, you pair that with decent inflation numbers over the last several months, you're actually seeing real wage growth, which is positive for workers as they can, again, spend that paycheck rather than all of it going towards inflation and losing it. They see that growth. One last point I wanted to get to on the labor market. I kind of talked about why I don't think there's going to be robust hiring and robust payrolls is, well, I don't know if we can fill that amount of demand. And we saw a JOLTS report this last week, came out 7.4 million job openings. But a large problem is, do we have the people to fill it? And one thing that we've discussed in the past is an aging population that has seen assets climb tremendously, which has enabled many near retirement to have that luxury of retirement. While I don't want to say it's negative, I don't want to say, you shouldn't retire, you've worked your whole life, you can't retire. It does have an impact on, of course, this labor data. If you actually look at the working age population, or those between the ages of 25 and 54, well, the labor force participation rate for that group remained near historical highs, around 83%. I mean, we are seeing people in that demographic work, but again, you're 64 and you have that ability to retire. Well, now you're not going to be able to fill that job opening because you're like, I'm good, I don't need to work. That could cause problems, obviously, in payroll growth if we have more people continuing to retire, as we've seen this price appreciation in the stock market, in the real estate market, pretty much all asset classes.
Yeah, and we, again, on the individual side, working with individuals and individual clients, we have seen that a lot where people are retiring. I mean, I've had people retire in their 40s because the assets have accumulated and they were good savers. It's not like they were tech people that exited a business with $20 million. Normal people have been saving and the markets have been going up, so it gives people that ability potentially to retire earlier than they thought. And yeah, now what's going to happen with those vacancies? Yeah.
So, I mean, I think the moral of the story here with this labor report is, it's questionable. I mean, there was some bad news in it. I don't want to sugarcoat it. There was some bad stuff that we did see. But again, one data point, one report is not enough for me to panic and say we're going to have a recession by the end of this year. I don't think that's going to happen. Maybe if we have 3, 4, 5 bad employment reports, we'd probably be heading towards recession, but I don't see that happening.
When we tell you to panic, you should really panic, because anytime there's any type of negative news, it's bad, but this is okay. So
not that bad.